You know that sick feeling when you're watching your portfolio plummet and every instinct is screaming?
Sell everything!
That exact moment, someone just became a millionaire off your panic. And here's the part that's going to blow your mind. They didn't just predict your fear, they profit from it. Before I show you exactly how they do this, think about the last time your portfolio dropped. What was your first instinct? Hold that thought, because in 10 minutes, you're going to see that reaction in a completely different light. Picture this. While you're sitting there having that internal freakout,
algorithms are processing millions of data points every second
about how you specifically react to market chaos. They know you better than you know yourself. They know you'll check your phone 47 times. They know you'll Google, should I sell my stocks? They even know you'll text someone asking if you should sell. I'm about to show you how they literally profit from the crashes that trigger your panic, then profit billions while you're left holding the bag. But more importantly, I'll show you the one psychological shift that flips you from their victim to someone who actually wins when everyone else is losing their minds. Let me paint you a picture of what's really happening behind the scenes. While you're having that internal debate for hours, should I sell? Should I hold? Maybe I should just sell half. These systems execute thousands of trades in milliseconds, buying your panic-sold assets at discount prices. But it gets darker, creepy. These AI systems are literally stalking you. They are monitoring which financial articles you click on, how long you spend reading market news, even the speed at which you type when you're logging into your trading account. Fast typing, you're panicking. Slow, deliberate typing, you're being strategic. Think I'm exaggerating?
Trading firms use algorithms that can detect even tiny delays
in the average response time of retail investors during a market dip. That tiny hesitation, that frozen fight or flight moment told them everything they needed to know. If you're still with me, comment algorithms below. I want to see how many people make it to this revelation, because what I'm about to tell you next is going to make you question everything. Now here's what they're really targeting. Every investor has two voices fighting in their head when markets crash. I call them Sam and Luke, and these avatars represent the actual brain processes happening inside you during every market crash. Here's what's actually happening in your brain. Your fear center fires faster than your thinking center. When markets crash, your brain literally puts panic before logic.
Get out now!
That's Sam, your panic voice.
Wait, let's think about this.
That's Luke, your strategic voice.
When you see red numbers, the brain chemistry of market panic. And this is wild. When your portfolio drops, your brain dumps cortisol and adrenaline into your bloodstream within seconds. It's the exact same chemical cocktail your ancestors got when facing a charging mammoth. Your heart rate spikes, your breathing gets shallow, and logical thinking literally gets hijacked. The amygdala, your brain's alarm system, fires instantly when it sees financial loss. Meanwhile, your prefrontal cortex, the part that does math and thinks rationally, takes precious extra seconds to boot up.
Danger! Lose money! Dad, get out now!
Wait, let me think about this logically.
By the time Luke starts talking, Sam's already flooded your system with stress hormones that make rational thinking nearly impossible. This is why you can know all the right investment strategies intellectually, but when markets crash, your body betrays you. Your ancient survival brain literally cannot tell the difference between a portfolio drop and a physical threat. The fascinating part, successful investors have learned to recognize these physical warning signs. Racing heart, sweaty palms, that sick stomach feeling as buy signals, not sell signals. The problem? What saved your ancestors from saber-toothed tigers now feeds your money straight into someone else's trading system.
These aren't just profit machines. They're psychological warfare systems targeting that Sam voice in your head, your protective, emotionally reactive self that feels panic when markets drop. They know exactly how to trigger Sam while drowning out Luke, your calm, strategic voice in your head. Here's the most disturbing part.
High-frequency trading firms don't just wait for crashes. They can make them worse.
Imagine you're watching your stocks drop 2%. Your heart starts racing. Sam's getting loud. But what you don't know is that an algorithm just triggered that initial drop by flooding the market with sell orders. Not because anything fundamentally changed with the companies you own, but because they wanted to activate your Sam voice.
The market's crashing! Sell everything!
Meanwhile, the same algorithm that created that 2% drop is now buying everything Sam just panic sold at those artificial discounts. You just got played, and you didn't even know the game had started. But, here's where it gets really twisted. And I'm about to show you something that'll make you question every financial decision you've ever made. These algorithms don't just wait for you to panic. They've mapped out the exact sequence of psychological buttons that guarantee you'll hand over your money. There are 3 specific triggers, and I bet they've used all 3 on you in the last market dip. They know most of us are struggling with that inner voice debate of panicked Sam versus strategic Luke in our head, and these systems know exactly which buttons to push to make Sam win every time. Loss aversion. The first button they push, and this is sick. They know losing money hurts exactly 2.5 times more than making the same amount feels good. Sam obsesses over every dollar lost while barely noticing gains. Regular investors started panic selling after just 3 days. But here's what they didn't know. Herd mentality, the second psychological trigger. When you see other people selling, your brain automatically assumes they know something you don't. It's like when you see people running from a burning building. You instinctively run too without questioning why. But what if I told you those other people are actually algorithms creating fake selling pressure?
Smart money is bailing with inside information.
Maybe they're just panicking too.
Recency bias, the third button they hit. Your brain thinks what happened last week matters more than 50 years of market history. They exploit this by timing their artificial drops right after you've seen scary headlines.
The market crashed last week. It's probably going to crash again.
But historically, similar situations recover within 4 months, about 73% of the time.
History, this is happening right now.
And here's the part that should terrify you. When all 3 buttons hit at once, it's a perfect storm. And Sam completely drowns out Luke.
These algorithms have gotten scary good at predicting panic selling.
They know exactly when you'll panic sell, down to the hour. Quick question for you. Which Sam pattern gets you? Drop a comment. The pain obsession, the crowd following, or the recent event fixation. Next revelation will completely change how you view this entire game. So here's what the 5% who actually get rich during crashes know that you don't. And this is going to flip everything you think you know about market timing. They've trained Luke to win the Sam versus Luke battle through systematic preparation. But it's not what you think.
Everything's crashing. Sell everything.
Everyone's panicking. That means assets are getting cheap. If they keep dropping, I'll buy more. Fear creates the best buying opportunities.
Contrarians watch for specific signals, the VIX fear gauge spiking above 30, trading volume 3 times higher than normal, and social media panic reaching peak intensity. These indicate maximum Sam panic territory across the market, March 2020. So, while most investors were panicking about bank collapse like Sam, Contrarian Luke calculated that major banks were trading at 0.7 times book value, meaning the market valued them at less than their physical assets.
Banks are doomed. Financial collapse. Get out.
Banks are selling below book value. This is temporary panic, not permanent damage.
Investors who bought bank stocks during peak March 2020 saw strong returns within 8 months when sanity returned. Warren Buffett made $12 billion during the 2008 crisis using this exact approach. While everyone else's Sam brain was in full panic mode, top investors who thought like Luke saw opportunity. Reality check. But here's the truth. It's all rigged. These algorithms aren't just taking advantage of panic. They're making it happen. The 5% who profit, they know exactly how to make it work for them. While you're sitting there watching your stocks drop, these systems are already cashing in on your fear. It's not about the market anymore. It's about playing you. The defense strategies coming up could save you thousands. If this is eye-opening so far, smash that subscribe button. You're probably not going to become some master where Luke always beats Sam. So instead, you need to build systems that work even when that Sam part of your brain is screaming. And here's something most people never realize. The best defense isn't trying to control your emotions, it's making your emotions irrelevant. Strategy 1. Write down your plan before you need it. Sit down when markets are calm and write out exactly what you're going to do when Sam starts panicking. Your goals, how much risk you can handle, and when you actually need your money. When the next crash hits and Sam demands emergency selling, Luke just points to the written plan.
We already decided what to do in this situation.
This is different.
That's what you said last time. We're sticking to the plan.
Research from Vanguard shows that investors with written investment plans outperform emotional traders by an average of 3.2% annually, adding up to more wealth over a 30-year period. Strategy 2. Automate everything you can. Set up automatic investing, same amount, same time, every month, no matter what. When markets are up, you buy fewer shares. When they're down, you buy more.
The market's crashing! Don't invest this month!
Too late. It already happened automatically. That's exactly why we automated it, to save us from ourselves.
Dollar cost averaging studies show that automated investors significantly outperform emotional traders who try to time their entries and exits. Strategy 3, spread it out and check less often. Don't put all your eggs in one basket: stocks, bonds, real estate, whatever. And here's the big one. Stop checking your portfolio every day. Set a schedule, once a quarter, maybe once a year. When you do check, rebalance. Sell what did well, buy what got beaten up. You're buying low and selling high automatically, without emotion. Studies show investors who check portfolios daily underperform quarterly checkers by 2.1% annually due to overtrading based on short-term market noise. These systems work because they admit Sam's going to show up. So instead of trying to make that Luke part of your brain perfect, build guardrails that protect you even when Sam's winning the argument in your head. This video opened your eyes to how the system really works. Hit that notification bell. When the next crash hits, you'll still have that internal battle. But now you have systems in place, so it doesn't matter who wins. Sam will still panic, but Luke has backup written plans, automation, and diversification. These systems run the show now.
It's happening again! The crash is here!
Wait, hold up. This is exactly what they told me would happen.
Everyone's panic Sam brain is freaking out, which means opportunities are showing up. Now you have systems in place that are designed for this. That's when you flip from part of the herd to player in the same crash that would have wiped you out before. The people counting on predictable freakouts just lost their edge. You just learned what the top 5% of investors have known for decades. The system works when you stop fighting your psychology and start working with it. Because trust me, Sam's gonna show up again.
Unga! Fire bat!
Indeed. Let's analyze the risk-reward matrix before proceeding.
But now you'll be ready. Thanks for watching. If this helped, the next one's even better.